Morning and welcome to One Financial Markets morning commentary. I'm Andrew Johnston, Chief Dealer at One Financial Markets, and we're going to go over what happened with the Fed release last night. So, all very interesting. Just looking at the chart here, the euro dollar appreciated, meaning the dollar sold off quite aggressively. And basically, what did we get from the statement? Now, there was no interest rate hike, and in the statement, there was no real change and no real influence or any indication about what they were going to do next. But the thing that the market apparently has gone on is that they inserted a phrase for their balance sheet normalization saying relatively soon. So relatively soon, apparently, from all of those lovely algos and analysts out there, means September hike time. Which is weird. I don't know how you can infer that from those phrases, but the market has moved in it. What I get from the market is that it doesn't matter what the Fed's saying at the moment. The equity market wants to go up in the US. The dollar depreciating against other currencies makes it cheaper for overseas investors to buy equities in the US. Therefore, equity markets going up as the dollar goes down. Plus, Trump gets what he wants. He wants to go to war on trade with China. The lower dollar assists this. So all round, a lower dollar, equities go up, and obviously you're seeing the other crosses affected by that. Euro, traded 130 pips yesterday on the back of that. However, prior, and this is just insane, prior to the release of the Fed, some idiot from the ECB, Nowotny, who is part of the European Central Bank Governing Council, releases comments that is, and I quote, "It is reasonable to discuss reducing intensity of stimulus." So this means reducing their bond buyback stuff, and therefore, if they're not buying bonds back, bond yields go up. Therefore, the euro goes up. So not only did we get hawkish tone from Nowotny, which means interest rates are going up, we also got dovish tone from the Fed. So the euro dollar move just flew. Who's the press secretary for this guy Nowotny? What is this guy thinking? Prior to release, he's doing this. So we've got this fantastic move here in euro dollar. And it's the one that we wanted. We discussed this yesterday about settlement above 117. We've got the settlement above 117 now, and now we're looking at just this uptrend here. And if we look at where we fell off in 2015, we've got this massive gap here of where there's no support or resistance. There's nothing really, a void that needs to be filled. And this is where we're looking to start to play the rest of the game out. So it looks like the dollar is to stay down for as effectively as long as the Fed want it down. The equities keep making new highs based on the lower dollar, and they'll quite happily play this out until they need it. And when it happens, when they have to normalise their balance sheet, and what we mean by balance sheet normalisation is, let's give this example. So say a company takes out a load of debt and then has to suddenly pay back that debt. How do they do it? So in terms of the US government, they've issued a hell of a lot of bonds, borrowed a lot of debt in order to keep the country going. Now they have to normalise the debt on their balance sheet. How the hell are they going to do that? I think it's just frightening, absolutely frightening. And at the moment, I think what they're doing is they're planting hike in the back of people's heads for the basis that when they actually start to do stuff, the market's going to crash and they're going to have to then cut rates again. So Yellen did actually say that we're increasing rates, so then when we need to cut them, we can, which is just insanity to be honest. But we're traders in the market, and all we're looking at is how the price movement works at the moment. And if we look at the charts of euro dollar, it looks like it's in an uptrend. We'll look at sterling as well. Once again, this is in our corridor here, nice uptrend as well. Another notable mover yesterday was gold, which was up about $15 yesterday, and certainly on the statement made a good $10 to $13 move. We've had this sideways consolidation pattern, but on the back of it, with the weakening of the dollar, and that's the only real reason why gold went up, was the weakening of the dollar. We're looking at the 1290 area before we see any real resistance. News out today, economic calendar, very light, some US data at 1:30, consumer goods, but very, very light, and I think we should probably trade range bound today. In the open, UK Open here and European Opens, you'll see people probably take some profits on their longs if they're long overnight. So you might see slight dip in euro, slight dip in cable and gold, and then the status quo will come back and people will start to take the long consensus again. Friday is the day we're probably waiting for now, after the 130s today, and we've got US GDP. But it's the Fed hasn't really painted anything for anyone, and it's basically the market has taken the bull by the horns and said, this is the direction we're going in, and it doesn't really matter what they say. So we'll continue to analyse the markets on a daily basis, but from me in the front lines here, we'll see you tomorrow.